Welcome to my channel. I'm Dr. Romano. In today's video, I'm going to share with you the #1 important tips on keeping and preserving your wealth and growing it for your future. And if you do these tips that I give you, it will certainly happen for you. One of the most important features on growing your wealth is making sure that nobody could sue you and take away your wealth. Now, in order to protect yourself financially and legally, you need to create a trust. A trust is a short-term agreement. Short-term, it could be up to 100 years, whatever it is. And so from there, you take each of your piece of real estate assets, you create an LLC for that real estate, whatever it is, a house or a building, and the owner of that LLC is going to be the trust. Before we continue the video, please remember to do thumbs up to say thank you, Anthony. It's right there, just click it. Thank you so much. This is very important. You want to take your name off of your real estate because if someone sues you, the attorney will go after your real estate. In other words, the person suing you, their attorney, will look you up to see what you own and sue you. Now, if you have nothing on the books, so to speak, they will not bother suing you because they're not going to get anything. Now, this is very, very, very important to make sure that you do this. And also, you should do this to your pension. If you have a 401k, whatever it is, you need to protect your assets. When I say your 401k or whatever you have in your retirement, you could also legally protect it. Because the attorney, whoever's suing you, their attorney, they will come after you. Now, when I say also legally, well, if you're going to be married or you are in a state like Nevada or Texas or Florida or Pennsylvania, as soon as you are married to someone, whether you sign a prenuptial agreement or not, they're legally entitled to half of what you have. Now, there's also states in the union that basically if you live with someone for even just a couple of months, that person could literally take half of what you have. And that's really scary because you worked your whole life not to give it away to someone. No, when you die, that's another story. But as of now, you are creating wealth for your future, and you should not need to share that with anyone legally. So this is why you should put all of your assets in a trust. So I'm going to tell you exactly how to do it. As I mentioned, each piece of real estate goes into its own LLC in the state that you own it. The owner of that LLC is the trust. How to set up a trust? Okay, you must go to a foreign country. The best foreign country right now is Belize. You go to Belize, you don't have to go there physically, you can do it online, and you create a trust. You have to speak to a trust company. They will help you with the process, and there's a number of companies that I could provide to you, best prices and the most knowledgeable. Now, so once you create the trust, okay, you're going to add an LLC to that trust, okay, in that country. So you have the trust, it's basically umbrella, and you create an LLC that the trust owns. Next, the LLC in that foreign country is going to own your LLCs in America, the real estate properties, etc. So every single property that you own has to have their own LLC in the state that you own it. So let's say you own property in Manhattan. You would create an LLC in New York State, and the owner of your piece of property would be the LLC. Who owns that LLC? The Trust LLC in Belize, okay? Now, there's a reason why you don't want your trust to actually own anything except that LLC. Because what happens is when, well, I'm not going to get into that right now. Let's just focus on what you have to do to protect your actual assets. You could also have your gold reserves. Remember what I say about having 20% of your wealth in gold coins? Well, your gold coins, if you actually want to put someone as ownership, you could also create the LLC, that LLC in Belize, and have the Belize LLC own the gold, okay? Or you could create a safe deposit box here in America, put all your gold coins into that safe deposit box, and the owner of the safe deposit box is the LLC in Belize. Make sense? You must do it like this. If you don't, you're wasting your time and you will get your wealth confiscated. Next, the most important wealth preserving tip is actually knowing when to invest in the real estate markets, when to invest in the gold markets, that's the commodities, when to invest in the stock market, etc. It's not that you should be owning everything your entire life and you're having the same portfolio method. No, you have to ride the wave. In 2006, is when you should have actually sold your real estate portfolio and you should have started to invest in the commodities market. Now, if you don't want to buy the gold coins, so to speak, because in this method, you're not buying the gold coins. This is your overall wealth. Now, the gold coins is a 20% reserve that you always keep of your wealth. You really never sell it, but you can sell part of it at certain times. It's used for a risk measure. So let's say you lose a lot of money in the the stock market. That's when you would sell your gold reserves during a stock market collapse because it made double or half of 30%. So if you lost 30% in the stock market, you sell your part of your gold reserves to make it up. But if you follow what I'm teaching you, so when the stock market is rising and everyone's making money, that's when you sell your real estate portfolio and you invest it in the commodities market. You could buy the ETFs, you could buy, you have to figure out how to do this. You don't buy the gold coins in this method. You're buying just the ETF or the actual, you go on the commodities market and you actually buy the gold. You hold on to it until the stock market collapses. About a year after it collapses, that's when the commodities market will be peaking. Then you sell your commodities ETFs, or the actual gold that you're buying on the markets, and then you reinvest it in the real estate market to buy those foreclosures, to buy those discount properties, etc. But it may take more than a year to 2 years after the stock market collapses for the real estate market to actually be at its bottom. So you have to figure all this out. But I'm teaching you the principle. When the real estate markets and the stock market is rising, okay, you want to pull out of your real estate market and invest in gold before it starts to go up. When the stock market collapses, then the money that you made from real estate, you invested in gold. Now that's rising during a stock market collapse. Then around a year or so after the stock market collapses, then you sell your gold reserves, your gold, whatever you made on your real estate and you invested in gold, whatever you made on that, then you sell it all. You're liquid now, and then you go into the real estate market and you buy foreclosures if you can. Don't worry about if someone's living in there and you can't get them out. Don't worry about anything because eventually you will get them out. Now, of course, there are certain states that you would not actually want to buy real estate in. For example, New York City is the worst place to buy rental properties because you can't get the tenant out for 6 months minimum. But in places like Colorado, if you don't pay your rent by the 5th, you're in the street and there's nothing that you're going to do about it, etc. So you have to figure out which state to actually buy real estate in that's actually better. Whereas in, let's say, Nevada, would you really want to buy real estate there because whatever the situation is, when the stock market actually collapses, who goes on vacation to spend money on gambling? So exactly, so you need to figure out which state to buy it in. Would you want to buy it in Florida where it's a resort village? No, because again, that goes down too. However, when the stock market collapses and the real estate market collapses, the resort villages go down even farther. So Vail, Beaver Creek, Breckenridge, Keystone, probably Lake Tahoe where there's the skiing, also Florida, etc., Arizona, wherever there's vacation properties, those properties are dumped, and they dump them so fast. So if you actually purchase them with the intent on holding it, you can. But you're not going to always get rental income from it when you do that, because if the markets are doing really bad, how are you going to rent it out, right? Makes sense? So you have to be careful what you want. But if you do focus on those resort villages when the market actually does drop, you make a lot more. Because look at Vail, Colorado. No, let's look at Breckenridge. All right, Breckenridge, Colorado, before the market started to rise in around 2015, you could have bought a house for around $300,000, and you could have bought a plot of land for around $30,000. That same plot of land is worth $600,000. That same house is worth $1.5 million to $2 million. So exactly. But now that the market is going to collapse, the real estate market is not going to do so well, people are now not able to rent their houses up there. Real estate brokers are leaving the resort villages because they can't make money to pay their own rent. That's when it collapses. So it's a cycle, and you have to know that cycle. So now that you're entering the markets again for the real estate markets, you also want to focus on the stock market. Because now after the stock market collapse, let's say, you've waited about a year or 2 years to enter in the real estate market, okay, you sold your commodities portfolio, you take the assets, the gains that you made from that, you reinvest some of that into the real estate market, etc. And then you want to focus on stocks and find companies that are underpriced, that do really bad during an economic collapse. Yes, you're going to have to hold on to those companies, but it's like a cycle. They do really bad when the stock market collapses, the real estate market collapses, but when the market turns around again after 4 to 5 years, that's when you will make your profits on the stock market again. And the cycle repeats itself. So I hope you take my information and you write it down, you try to make a plot map out of it on when to buy the commodities, when to sell it, when to reinvest in real estate, etc. And also what is really good is if you don't buy an actual house or an apartment complex or a condo, whatever it is, you can actually buy a plot of land when it's cheap and build on it when developers or contractors are looking to make money, because they can't. So they'll give you a really good price. Secondly, labor and the wood and sheetrock and all the products that it takes to build that house is really cheap when after the stock market collapses. So it's up to you to know how to finagle things around, but that's how you make money and you continue this preserving. You preserve your wealth over your lifetime. You need to be in at the right time and the right markets, and you need to learn how to legally protect yourself so that no one else could take away your wealth. And if you do this and you ride those cycles out every 8 to 10 years over a 30-year period, you have ascertained a lot of wealth. So I want to thank you so much. Please remember to do thumbs up to say thank you, Anthony. And please also remember, if you like my channel and you like the stock market tips that I give you, please subscribe. It just says press the button. That's all you have to do. Thank you so much.